As of this recording, we don't have the results of the election, and actually by the time this video is published, we probably still won't know. But that's okay, because what we're going to do in this video is game some possible scenarios of what could happen. And that's really all you can do in the stock market anyway, because no one knows what's going to happen for sure. It's all about just weighing probabilities and playing what happens. So is a crash possible? Maybe. We're going to find out in this weekly market review. As always, we will start with this quote from Nassim Taleb again. By definition, what works cannot be irrational. About every single person I know who has chronically failed in business shares that mental block. The failure to realize that if something stupid works and makes money, it cannot be stupid. And this is very true not only in business, but of course in markets too. And an example that you guys got to deal with because of me are these stupid video titles for every video. Very stupid, but they work, which is why I have to keep doing them, which is why maybe they aren't that stupid, as Taleb said. Another thing is the strategy that we use that I always talk about, our momentum strategy. The way we set targets to take profits on our positions when they have run up, it's very simple. We have a set percentage where we'll sell. And what's amazing is how often it works out perfectly. Like we sell right at the top. And remember, these are set percentages. We're not changing them based off the stock or anything. So we sell right at the top and then the stock dips down. And then it starts crashing and we're able to sell at break even again and we actually make money on a play that wouldn't have worked out otherwise. And when it comes to the markets, people want to get fancy. So when they hear that, they're like, oh, this isn't optimized. This is stupid. But nope, it's not stupid. It's very simple and it works. And when you're in the professional space and you tell people you have a momentum strategy in general, they're going to look at you like you're stupid. You're going to get laughed out of the room. Why? Because egos. Because a momentum strategy doesn't sound really cool. You're not trying to bet on the demise of the housing bubble or whatever cool things people do. Cool. Basically, it doesn't sound sophisticated enough. But in reality, it crushes 99% of professional investors too. And what is momentum trading? You're riding a trend. You identify which stocks are going up and you jump in on them. Again, maybe too stupid for the more sophisticated people, but those people are also not making as much money. And like Taleb says right here, it's a real huge mental block. And it happens in so many different areas. Business, the market, even art. But you definitely don't want to hold yourself back with that type of thinking. And of course, if you want to learn more about our momentum strategy, just check out this free training that we have that will teach you exactly how to use it. Same strategy myself and all our Fallible members use. I'll put a link to it in this video and down below in the description and comments. Free training. Really worth taking. Now let's look at some charts. So the setup on the S&P 500 is pretty interesting going into the end of the year because what we got is an inside, outside, inside pattern on the monthly chart. And again, we look at monthly charts because they're so zoomed back and so long term, you get a much better signal. Because the way the markets work, the shorter time frame that you go, the more noise you're going to get. So for example, if you see a breakout on 1 minute charts, it's much more likely to fail than a breakout on a daily chart, which is more likely to fail than a weekly chart, which is more likely to fail than a monthly chart, and you go higher and higher up the hierarchy. Monthly is about as far as we'll go. So if you look at the monthly, you got an inside, outside, inside bar. So what's that mean? So the August bar was a strong bull bar, right? This is easy to see, this white bar right here. Then the September bar, what did we see happen in September? And we covered this in the previous videos. Well, the market launched higher, but then retraced, and it also fell much, much lower, but then retraced as well. So what you ended up having is wicks outside of this bar, this first bar right here in August. That's why they call it an inside, outside bar. And then in October, we got another bar with its wicks still within this same range, the same range set by this outside bar. So it's a little bit complicated, but basically what it's saying is that compression is happening. And what do we know about compression in the market? It always leads to expansion. It leads to a breakout, either higher or lower. That's just how volatility works in the market. Things get tighter and tighter like a coil and then it springs. So in this case, while you generally be agnostic about the direction of this type of pattern, because of the way October closed and its bearish close, there is more of a likelihood that we break lower out of this compression. And if we do break lower, then the next target would be 3,000 in the S&P. And in percentage terms, that would be 10% down from today's price. So a pretty decent correction. But again, we don't really know. It's just that bearish October bar that raises the odds in favor of a break lower. And that's where you would get everyone real scared of the crash. And to help with that, we got another wave of COVID and lockdowns coming, and we'll go over those numbers in a second. It's not looking good. But one thing that's going to do is put a pinch on oil demand. So Canada in particular is a large exporter of oil, and it sees its currency strengthen in times of rising oil prices and vice versa when oil falls. So if no one's driving around again, then yeah, the oil demand is going to fall, prices are going to fall. And that means the dollar will strengthen against the Canadian dollar. And you can see here for you currency traders, the USD CAD put in a double bottom here and bounced off the support line. Now positioning is crowded in the short US dollar, but a catalyst for a pop in this this currency pair would be the Republicans keeping control of the Senate. Why? Because tighter fiscal constraint means a stronger dollar, US dollar. So that's something to watch. Bitcoin was real strong in October. It closed near its highs for the month, which is just shy of its highest monthly close on record. And we were talking about this breakout for the last few weeks. Now we may see some short-term weakness as it digests the 14,000 level of resistance, but the bull trend is very strong here. You can see here there's a major resistance level at that 14,000 mark. So we might face some sideways movement for a bit, but the former resistance down here is now support. And if we do break up from this, the measured move will be next to 17,000. That would be the next target that we would fly to. There's that 17,000 right there. Got a lot of room. The Bitcoin market is on fire again. Now back in August, we were talking about Apple hitting extreme overbought levels. And actually after we talked about it, the chart peaked a few weeks later. Now the chart is setting up for some further downside. You can see that right here on the monthly chart, you got another inside, outside, inside pattern. And this one is once again bearish too because of this last bar. The stock closed near the lows for the month, which puts the odds in favor of further follow through to the downside going into the end of the year. So Apple is not looking so good. And this chart down below from NDR shows the Elite 8, which is Amazon, Apple, Microsoft, Google, Facebook, Netflix, Tesla, and Nvidia. So the Elite 8 has risen from around 1 trillion to 8 trillion in just 8 years, which is interesting when you compare it to the historic bubble composite. Look how closely it's tracking. And you see what happened next with the blue line, right? So are we going to see the same thing with the orange line finally? Could be. Give the markets a nice reset. If we take a look at the VIX and actually look at the spread, the VIX index closed at 40.28 on the 28th of October, which is the highest since June 11th. But its future contract is only at 27.42, which means there's a big negative spread in this indicator. And that's usually a pretty reliable bottom indicator. Now we're going to talk about the election a little more and how to play it, but one of the things we're doing is just finding companies that we want to play after the results come out, depending on which way they break. And one of them is Sturm Ruger and Company, gun makers. You know, guns have been sold out everywhere, bullets too, for a long time now. Well, this company recently reported net sales of 145.7 million and earnings of 1.39 per share, compared with 95 million in net sales of the last third quarter and 27 cents in profit. Huge increase in these numbers year over year. The stock recently broke out of a 6-year triangle, as you can see here, and now it's coming back to retest its support. So when it does that, that actually is a potential entry. You can see here it broke up from here and came down to retest, and now on this rebound you could potentially get in if you wanted. This is the monthly chart. If we go down to the daily, you can see where this rebound happened, and you can see also that the 50-day and the 200-day are kind of syncing up, which gives a very strong support. So normally if you're trying to do some discretionary trading, it's best to buy where there are multiple supports crossing each other. So not only do you have this triangle support from this larger pattern, but you have the 200-day and the 50-day. So this is a strong area where you could buy with lowered risk that it would break lower from here. And it's on this nice little rebound. So if you missed this first breakout, now you're going to get the second chance here. This is a really beautiful setup. First Solar is also breaking out of a huge base. 8 years, that's how long the base is. It made its highest monthly close in that time period. So again, I've been seeing various traders talk about this solar becoming a hot market again for stocks. And I think that will again depend on the election results too. The latest betting market odds have Biden as a clear favorite, along with the Democrats getting a narrow win in the Senate. The super forecasters of the Good Judgment Project have similar odds. And while there is a good likelihood of a blue sweep, the odds have really narrowed over the last few weeks, and now they're not much better than a coin toss. And that's another reason why it might take a while for these results to come out, especially if it's contested. Now, once this whole election thing is over, we're gonna get back to COVID, CCPV, and the narrative is getting worse and worse. Look at these numbers right here. Deaths are spiking. It's not looking good. This second wave is for real. So we'll have to see what that does to the market. Here's something interesting too about US pension funds. They are in bad shape, as we already knew, but here's some more data. So they assume they'll earn 7.25% on their portfolios by mixing assets which yield less than 3% on average, which means that's not gonna work, right? There's a lot of assumptions baked into these pension funds and they're gonna come up short. So even if pension funds were to invest in high yielding assets only, junk bonds, which they're not allowed to do anyway, they'd still miss their target by about 200 basis points. So something has got to give at this point. Either asset prices got to fall massively to restore normal expected returns, because expected returns are really compressed right now with how much the market has gone up. This would trigger an immediate solvency crisis for most pension funds, which would be a big problem. Or pension funds will die from 1,000 cuts due to an absence of profitable reinvestment opportunities. Either way, most pension plans will fail to deliver their contractual obligations. This is something everyone's been tracking for years, but there's really no solution to it. And it's going to be a big mess when it does happen. A lot of people are depending on that money. It sucks. Now let's dive into this election a little bit more. more. Now we could go through all the stats about who we think is going to win, but it doesn't matter. You just got to gauge the probabilities like I was talking about before, right? So from the market perspective, there are just 3 outcomes really. One is that we'd have a blue wave. So Biden wins and the Dems take the Senate. So this would actually be the most bullish outcome for the stock market because it ensures that large amounts of fiscal stimulus will be coming down the pipe. So everybody will get their stimulus checks and put it into the market, hopefully again, just like they did last time. But in general, stimulus is always good for the market. More money means asset prices are pushed higher. Another outcome is Biden wins, but then we got a divided Congress. So Biden wins, but the Republicans keep the Senate. This would be the most bearish outcome because they'd be fighting tooth and nail over small amounts of fiscal spending. So things wouldn't get passed and there wouldn't be that stimulus we wanted. So in this case, we'd be looking at going long the US dollar and long bonds. The third option is that Trump wins and either Republicans or Democrats control the Senate. This would actually be a bullish to neutral outcome. For the market, at least, it'd be more of the same. Now, the highest likelihood is that this first scenario plays out the blue wave, but the race for Senate is tight. So while Biden probably has a 70% chance of winning, the chances that the Dems take the Senate is much closer to being a toss-up. And remember, the worst case scenario for the market would be Biden winning, but then the Democrats not winning the Senate. RCP's average has Biden at plus 6.8. Hillary last time this year was at just plus 2. This is the polling data. Now, like I was saying before, we probably won't know the outcome of the race until the end of this week, perhaps much later if it's close enough to be contested. But everybody is kind of expecting this. Everyone's expecting an ugly contested election, so this is likely already priced into the market. And if I'm looking at the market right now, and I'm recording this Tuesday morning, it's pretty strong right now. But I was talking to my business partner Tyler about it, who's really good at analyzing the VIX, and what he's expecting is that, yeah, we'll get some sideways to positive movement in the market during the day, but then some crazy volatility in the futures, which makes sense, right? But if everyone is expecting that ugly contested election, and VIX is already juiced up to 40, which is really high. In that case, we could see a brief spike higher, but it's much more likely that we're near the max level of uncertainty going into this election. And we'll see the volatility actually compress as the results start coming in. So any outcome either way for Biden or Trump, where we get data indicating a clean sweep, that would positively surprise the market and would actually be good for short-term price action. Because markets hate uncertainty, right? So if a more calm outcome happens, the market is going to like it and it's going to pop. Now, we already talked about the inside-outside bar on the S&P, right? But in the more daily time frame, we kind of expect the S&P to trade within this range, and that 3,200 level will provide the support. Now, if we get a strong close below this 3,200 level, then we'd be more bearish. But a close above this top level up here, well, then we'd be bullish. Price action gives you all the information you need most of the time, at least in my opinion. I know people refute that. But all in all, there's no real clear edge in trying to play the election. The key here is not to overtrade this market. We need to wait for the dust to settle and then let the tape, the price action, tell us which direction things will break. And that's why what we go by at Macro Ops and at Fallible is that price is king. Just like one of the greatest traders ever, Paul Tudor Jones, said, he's a slave to the tape. Because at the end of the day, we could do all this macro analysis and all of that, but really, it's so complicated that the only thing you can fully rely on is which way price is going. Now, Alex's style is to be more macro-oriented, but I took that price is king ideology a step further and became fully momentum systematic. So I really depend on price to give me all the information I need. If something is going up, then it's good, whether it makes sense or not. Going back to the Taleb quote, it's not stupid if it's making money. And that just fits best with my personality. Simple, easy to execute, make a bunch of money. Because I'm lazy. I also don't want to do that much work. I don't enjoy being glued to the markets constantly, and I don't have to be anymore, even through very volatile periods like right now. The feeling in the country right now is really disturbing. It's like everyone's holding their breath, waiting for everything to explode, which I don't know, maybe they're right, but at the same time, like with the research that we do at Macro Ops, all the history and everything, we know that a single president cannot bring down the entire structure of the country, at least in the United States, because we have strong institutions. It'll take more than that. So I don't know. I won't talk too much about that, but my point is a lot of the anxiety in this situation, and there's going to be other situations too that are all going to directly affect the market. I don't want to deal with that, right? That's why I have my system. That's why I follow price. Everything is laid out. All I do is execute and not worry about it, and I get the returns. And that's the way investing should be. Boring. Go carry on with your life. Have the investing be in the background. But anyway, if you want to learn more about how we do that, myself and all our Fallible members that are real happy, well, hopefully they're still happy going into this election, but check out this free training. There's a link in this video and down below in the description and comments. Definitely check it out. And if you haven't already, subscribe to this channel because we're going to update this story after we get results. We really update the market every single week. So if you want to see that, subscribe, and I will see you in the next video. Stay fallible out there. Bye.